Thank you all very much for joining digitally. It's an honor to be here, and it's an honor to speak at the Data Innovation Summit 2020. Thanks to the Data Innovation Summit for hosting this event, and thanks to Databricks for allowing me to speak here. I'm, as I said, honored to be here digitally, so let's start with a little bit about myself. My name is Jeroen van Zeeland, and I am the head of analytics for Norway's largest private asset manager, Storebrand. Storebrand is a complicated financial services company. We do everything from wealth management and pensions, where we are the largest private pension provider in Norway, with about 35% market share. But we are also an insurance company and a retail savings bank. So we are really and truly an omni line of business financial services company. And the analytics department that I head up provides services to all these lines of businesses. So we have a very complicated and complex portfolio with a lot of very interesting projects. So the analytics department, what we do is we deliver value through analytics-enabled projects. And what I mean by this is that the analytics department tries to make things better using data. This means everything from simple diagnoses of problems to analysis that can be fed back to the board or to steering groups. We do automation of processes, but we also do the fancier machine learning and data science projects, which lead to predictions or sometimes even prescriptions of actions that we need to take. And it's really important that we cover the whole spectrum here, because even though machine learning is hot and happening right now, we find that oftentimes there is a lot of value to be gained in automating processes or simply finding out what the problem is in analyzing things. So we pride ourselves on covering the whole value chain of analytics projects, if you will. In our company, we are organized together with the data department, and there are several benefits to that, such as the reuse of technology and method, knowledge sharing, and also to limit fragmentation. Because both teams are relatively small, this gives us a little bit of punching power. This brings us together in a group that's big enough to actually have a say and determine the direction forward. So the data department is organized together with the analytics department, and this is something that is also echoed or reflected in our architectural setup that I'll come back to in the end. In the analytics department, we have data engineers, data scientists, and data analysts, and we are responsible for delivering projects atop of the data that is made available by the data department. One of the key benefits here is that the data department can do a lot of cleaning, checking of data, so that the data available to the analytics team is of very high quality, which in turn means that we can have very small or short time to market for our products. Today, I will mainly speak about anomaly detection in insurance claims, or what is colloquially known as fraud detection. In this project, we focused on analysis, automation, and prediction. We didn't do so much diagnosis because it was clear what the problem was from the outset, and we didn't focus so much on prescription because we have to be very careful with calling things fraud. Of course, if you are being called fraud or fraudulent, that can have an impact on your future claims. So this we leave up to case handlers to decide. What we do is we determine whether a case is outlying and whether it needs to be looked at by a case handler. So this project is finding suspicious claims amongst all the claims that we get in. And there's a couple of motivations for this. In Storebrand, as in many other companies, we see an increased use of automation. This means that our claims are now partially automated. So when a customer makes a claim or files a claim, this is automatically paid out. And As a result of this, there's less human intervention in this workflow. It's less likely that a human will actually see the case. And so it's also less likely that they'll pick up on some anomalies. And these are the heuristics they typically employ. And this consistent application of heuristics is also very important because some people with a lot of experience will find certain things more indicative of fraudulent behavior than maybe a new joiner. And what we were able to do, and what I'll come back to, is we were able to take these rules that the advisors have and apply them consistently over the entire set of claims that we get in. So we codify advisory heuristics and we automate this workflow. And then finally, trust. For an insurance company, one of its key tenets is trust. People trust that we pay out when they file a claim, but they also trust that this system isn't abused by other customers. And fraud is often thought of as a victimless crime, but it's actually anything but. So an average P&C claim costs the average insurance company in Norway 130,000 Norwegian kroner. So that's about 13,000 euros. But the average life insurance claim goes up to 1.7 million Norwegian kroner. So about 170,000 euros. And this cost, even though it's distributed amongst all the other customers, is actually incurred. So the premium for all other customers go up. And so it's not truly a victimless crime. It's just that this cost is scarcely distributed across all the other users of the system, and they have to pay for it. And of course, like, it undermines, it erodes the trust in a company if you are kind of setting yourself up to be used by people who are committing fraud. Again, I have to kind of reiterate that it's very hard for a data science team to actually call something fraud. So what we are interested in which cases resemble fraudulent cases most, or which cases are most likely to be fraud, and we hand those over to the or to the case handlers, and they can make the final call on whether this is indeed a case of fraud or not. So how does this work? In our original setup, the advisors handled claims manually. This meant that a claim came in to an advisor, they looked at it, and they looked at whether they saw a certain set of behaviors that were indicative of fraud. And so they looked at, for instance, the differential between first agreement date and first claim date, or the height of the claim amount with respect to the product. And they send an email manually to the investigators team, who would then judge this and go forward with investigation or stop. So what we did in this project is we automated those rules. We codified those heuristics and consistently applied them to all incoming claims and also to all claims in the past. And we automated these flows because, as I said before, the claims system has also been automated. This is a system that now takes claims and judges whether they can be paid out on the same day immediately to the customer. And it's important for our customers that they get their money back quickly, but it's also important for a company as Storebrand to make sure that we don't set ourselves up to be abused by systems like that. So the increased automation in a different part of the flow makes a case for automating the fraud detection part. But that was not all, because this is simply the automation. We were also interested in finding more cases, or cases that were previously unregistered or unthought of. And for fraud or for anomaly detection, it's not just who you are, but it's also who you know. And I'll talk a little bit about these models and how we set this up in our project. So we started with the automation and codification. Then we created a supervised machine learning that tells us who you are like. So andere som deg, as we call it in Norway, it's the Netflix approach, where because others like you have done a certain thing, you are more likely to do the same thing. Because people of the same demographic makeup do a certain thing, you are more likely to do that. And this functions really quite well, but that's not all there is to it. There's also a who you know, and this is the graph-based model. It's the social network. People in your network that know how to take advantage of an insurance company will propagate this information through their network. So what we do in these machine learning approaches is we ascribe a prediction, a likelihood of being anomalous. So how far are you away from the standard behavior that we're expecting to see? And that, as I said before, is then handed over to the case investigator, who is the ultimate judge whether to pursue this as a fraudulent claim. It has to be noted that fraud is extremely rare as an event. So this makes modeling a little bit more difficult. Because fraud doesn't really happen that regularly, it is truly modeling rare behavior, and that is a hard thing to do, as you probably are aware of. So what is a graph-based approach? Well, first we constructed a network of customers, of claims, of policies, of products that those policies relate to. So all the nodes can be thought of as entities. So all the points on the graph network can be thought of as persons, cars, houses, policies, travel insurances. And all the edges are relationships between those nodes or entities. So this person owns, or is the recipient of, or is the knows the person involved. And so what happens when somebody gets implicated in a fraudulent case is it propagates through the network. It means that people that are associated with this policy will be given a likelihood of fraudulence. And of course, by association, they implicate that network. And so slowly this propagates outwards. And as you can see, the shades get slightly lighter tinted because, of course, if you're far away from a fraudulent case, that information doesn't travel all the way to you. But if you're very close, then that is probably something you are aware of. And we saw a lot of theoretical papers, but actually very little implementation. So we spoke to a lot of consulting companies here in Norway and competitors. And so as far as we can judge, nobody else has taken this approach. So we truly believe that this is a Norwegian first. So what did we do, or what did we use? We have what we call a data science workbench, a platform that is powered by Databricks. And as I showed in the beginning, we have this separation or joint data and analytics team. And that's what you'll see back here in the architecture. So we traditionally have our Databricks set up in Azure Cloud, but we also have a lot of data on-premise. And we were lucky enough to connect those two through something called Microsoft Express Route, which basically means we can treat on-premise as it were in cloud, or we can treat cloud as if it were on-premise, which makes the interaction and communication between the two very, very easy. So on-premise, we do the data storage, and in the cloud, we do the modeling. So we use the benefits of cloud, the scaling of clusters when we need that in the cloud, but we leave the data team to do their on-premise storage as they have done that. And so we leave both people working exactly where they want to work most. So on-premise, we have the data warehouse, which is operated and maintained by the data team. And in the cloud, we do our modeling in Databricks notebooks. So we query on-premise data sets directly from the notebooks by simply writing a command and connecting to the warehouse. But of course, this puts, as we are pretty big users of this data, this puts some strain on the on-premise data systems. And to avoid that, we have introduced Delta Lake, which we use as a staging facility. So we can load data sets into Delta Lake so that we have high availability, quick response times, and that we don't tax the on-premise systems. But we also use Delta Lake to store results of our model outputs, to store some information about how our models are performing. So you can also think of this as a sandbox for the analytics team. And finally, we were using tools from Microsoft to do the orchestration, but we found that for the engineers and for the data scientists alike, it would be easier to schedule pipelines directly from their notebooks. So we created our own open source project called Synbot Flow, which is a tooling package that you can use directly from Databricks that is available for everybody out there, but that you can use to schedule your pipelines directly from your notebooks. So the engineers simply have to validate that what the data scientist wrote is correct and functioning, but the data scientist themselves can set up the whole pipeline without any need for external intervention. And I think that is one of the biggest strengths of this setup, is that in theory, we don't need the engineering team to help out with simple ad hoc tasks. So the data scientist is now truly self-sufficient in getting the data, using the notebooks to clean, to model, to store model outputs, and to schedule their whole pipeline and write that information back to, for instance, on-prem, or deploy that model somewhere else. So this is our setup, and this has led us to be able to deliver the fraud or the anomaly detection project in just 4 short months. And that's a result that we are pretty proud of, given the resources that we have. So yeah, results. I think it's been a very, very interesting project, and I think we can say that we are a Norwegian first. We are the first to use this theoretical idea of graph databases and graph modeling and apply that to actual fraud. To date, 37% of the investigated cases that we identify were found fraudulent by our investigators. It took just 4 months to deliver this project end to end, from unlocking the sources all the way through evaluation. And by the platform or the workbench that I showed, we were able to achieve a cost reduction of almost 70% with results to an older platform or workbench that we had with a variety of different tools. So those things combined, the speed increase, the simplicity of the platform, the cost reduction, and the ability to still deliver, make us think that this is really the way forward for us. And we are very happy to say that this works for us. So thank you very much for joining me here. I appreciate your time, and I hope to get questions in the chat